Hello everyone, and welcome back to Explain the Charts. Today is November 3rd, 2025, and we are taking a deep dive into one of the most talked about stocks on the market, Tesla, ticker symbol Tesla. There is a whirlwind of news right now, creating a very interesting and volatile setup, so we're going to break down the headlines and then see how it all translates to the charts. First, let's talk about the news, because it's been a mix of bearish and bullish signals. In late October, Tesla reported its Q3 earnings, and while revenue saw growth, the company missed Wall Street's profit estimates. As you'd expect, the initial reaction was negative, with headlines focusing on a post-earnings stock drop. CEO Elon Musk, during the call, focused heavily on the future, talking about robotics, energy storage, and fully autonomous vehicles. However, it seems many investors were more concerned with the current operating income, which saw a year-over-year decrease. This highlights the classic conflict for Tesla. Is it a story stock valued on future potential, or should it be judged on today's fundamentals? Adding to the uncertainty, Tesla is facing regulatory probes and some reports of softening regional sales. But it's not all negative. We saw positive analyst coverage from Cantor Fitzgerald about a week ago, which was credited with helping the stock surge higher. Tesla also announced a major energy storage deal to purchase $2 billion worth of batteries from Samsung SDI, reinforcing the growth narrative in their energy segment. The biggest and most immediate story, however, is the monumental shareholder vote happening this week on Elon Musk's massive, nearly trillion-dollar pay plan. The outcome of this vote is seen by many as a referendum on Musk's leadership and could determine whether he gains even more voting control over the company. Supporters say it's necessary to keep him motivated, while critics call it excessive and raise governance concerns. This vote is undoubtedly the biggest catalyst on the horizon and is likely responsible for the recent coiling of the price action as the market holds its breath. So with that backdrop of conflicting news and major uncertainty, let's turn to the charts and see what they're telling us. Now, let's zoom in on the daily chart to that exact period around the earnings announcement in late October. After closing around $442 on October 21st, we saw a slight dip to $439 on the 22nd as the market anticipated the report. Then, on October 23rd, the day after the earnings call, the stock gapped down significantly at the open to $420 and even traded as low as $413.90. This is the drop everyone was talking about, a direct reaction to the missed profit targets. But what happened next is the most important part of the story. In a stunning reversal, buyers stepped in with immense force, pushing the price all the way back up to close the day positive at nearly $449. This created a massive bullish reversal candle on extremely high volume, which is a powerful technical signal. It tells us that despite the negative headline numbers, dip buyers saw the long-term value and aggressively bought the stock, completely absorbing all the selling pressure. This perfectly aligns with the narrative of investors looking past the short-term earnings miss and buying into Musk's long-term vision. The low of that day, around $414, has now established itself as a critical short-term support level. Following that incredible reversal, the stock saw significant follow-through to the upside. The stock rallied for several days, breaking through previous resistance and eventually peaking around the $465 to $467 level late last week. This powerful upward move was likely fueled by the positive momentum from that reversal, as well as the bullish analyst coverage we mentioned earlier. From a technical perspective, this multi-day run was strong and confirmed the bullish sentiment that emerged from the post-earnings low. However, as we approached the end of the month, you can see the momentum began to slow down as the price entered a consolidation phase. To get a better look at this recent consolidation, let's switch to the 15-minute chart, which shows the price action from the last 3 days of October. Here, we can see the price has been trading in a relatively tight range. We have clear resistance at the top of this range, right around the $465 mark, which the price has tested and failed to break through multiple times. On the downside, we've established a support zone around the $440 level. This price action is classic consolidation. The market is building energy and waiting for its next direction. This tightening range strongly suggests that the market is waiting for a catalyst, which is almost certainly the news regarding the shareholder vote on Musk's pay package. A break of either side of this range on high volume will likely signal the start of the next significant move. So, let's go back to the daily chart to put it all together and talk about what to look for next. To recap, we have several key price levels to watch. Our most critical short-term support is the low from the October 23rd reversal, right around $414. A break below that level would be a very bearish signal and would invalidate the recent bullish momentum. The more immediate support is the bottom of our recent consolidation range at about $440. To the upside, the immediate resistance is the top of that same range, around $465. If the price can break above $465, the next major target would be the highs from December of last year, near $488. So, what's the outlook? The bullish case is strong due to the powerful reversal on high volume, indicating significant underlying demand. If the pay package vote passes without issue, it could be the catalyst that pushes the stock through the $465 resistance. I would place the likelihood of this scenario at around 60%, with a confirmed break above $465 being the key signal to watch for. The bearish case revolves around the uncertainty of the vote and other headwinds. If the vote fails, or if the result is contested and creates a corporate governance crisis, we could see a swift move down. A break below the $440 consolidation support would be the first warning sign, potentially leading to a retest of that critical $414 low. I see this scenario as having roughly a 40% chance, as the market seems to have priced in a lot of optimism already. The most important thing for traders this week will be to watch the news flow regarding the shareholder vote and see how the price reacts at these key levels of $440 and $465. That's our analysis for today. Remember, all of this is for informational purposes only and is not financial advice. You should always do your own research and make investment decisions based on your own individual circumstances. Thanks for watching Explain the Charts, and we'll see you next time.